Chintan, how much percent of one's portfolio should be allocated to gold? And I'm talking with somebody who's average age with an average risk profile, with the bias is to equities for wealth creation.
I think in a current situation, your portfolio allocation should be in a gold should not be less than 15 to 20%, depends upon what exactly the financial arrangement one has made, because gold has given a good return, which was not the case initially. And it is a hedge against the other investment like equity, real estate. In case of difficult years, gold will outperform, and on a normal years also, with the kind of situation we are into, which is a downward interest rate, and the real interest rates are going to be for a gold would be positive, So 20% is my punt, it's minimum, and I always have loved gold. And if you see the returns over a period of time in equity index, if I see, it's around 13% per annum since inception, and gold would be somewhere around 8 to 10%. But the kind of comfort and the kind of the solidity which it gives, it's tremendous. So I would say minimum 20% investment for the middle age and the medium income size.
Chirag, what are your thoughts on that? What percentage of one's portfolio should be allocated to gold? And also, do you recommend this to be done through an SIP, or should this be done upfronted or in lump sum investments?
So we have done some studies in terms of the more you add gold to your portfolio, what is the impact on returns and risk reduction that gold tends to bring. So we kind of added 5% to the portfolio, and about at 15% allocation, you don't impact overall portfolio returns. It just got augmented to some extent. And the risk reduction keeps happening with every 5% addition. So 15% is that sweet spot where you kind of add to portfolio returns and still reduce the risk of the portfolio by adding gold. Beyond 15%, it does reduce your risk, but you start compromising on the return potential of your overall portfolio. So 15% is that optimal level where you kind of balance out the benefits of adding gold from a risk return perspective.
So Chirag, in a case where somebody doesn't have any gold as part of their financial portfolio currently, what do you recommend he should do? Should he buy the 15% upfront, or should the entry be staggered? Because we have seen gold up 33% year to date, right?
So I think, as I said, fundamentally, it looks good from a medium to long-term perspective. Short term, yes, there could be anybody's guess where the gold price is headed. Of course, it has moved higher, but we have seen those cycles, right? From 2002-3 to 2007, how gold moved up, and there was a brief correction in between, and then again it moved up. So you will see those cycles in gold, and this cycle looks favorable. So if you don't have any allocation to gold, maybe I would say that if you, assuming you want to reach that 15% goal, maybe buy half of it now and half of it stagger over next 12 months would be an optimal strategy that you should adopt.
Chintan, what about you? What do you recommend to your clients? What is a preferred instrument to invest in gold?
See, I think Chirag has spoken very nicely that whatever is there to consume, I think physical is the natural choice, and with the kind of demography of our population, every year marriages are going to be on a top of the list, whereas female have to wear the ornaments or have to consume gold. That is where the physical gold comes into play. And that is why we see that even though we import on an average somewhere around 800 tons of gold every year, but AUM in gold ETFs are not more than 60 tons, only 60 tons. Whereas globally, where people are not consuming gold, it is still at 3,000 tons. So there is a long way to go. People are still believing in physical, but yes, trend has to change. And investment product, whatever our clients have to make, we always suggest them as an ETF. ETF is a wonderful product where you can marginize it also. So if somebody is playing a derivatives, then he can also pledge these units and get the margin. So as per my understanding, whoever wants to levered return, they can maximize the return by leveraging it through ETFs and fund of fund or the multi-asset fund. Okay, so whatever is there for the consumption, you please buy it in physical. Otherwise, paper products are the best products.